Hey, everybody. Really glad and excited to have a fast growing, well known guest, George Gammon. As someone who fancies himself as a bit of a teacher and enjoys bringing people along, I have to actually say, here's the man who went and did what I thought of doing and never had the courage of doing. He got the whiteboard out, he drew the pictures, and he's almost become a legend with his step number two and many other key catchphrases as an educative note on YouTube. The other thing that's really imperative about George that I enjoy is that he's gotten brought on a real high list of quality opinions, and he's broken them down and he's explained things in almost idiot proof. I say almost idiot proof, considering myself in the audience, so that many of the more complexities that tend to see things wash over our faces actually can become pretty real. One of the reasons I really wanted to get him on is through that process, he's had really interesting people and is obviously working towards building his own opinion. And I think one of the smartest guys of the George Gammon show is George Gammon himself. So here we have him. George, welcome.
Well, thank you for having me. It's a pleasure to be here.
Yep, we're indeed delighted. So, George, so much has happened. So many people you've spoken to already, many of them real frontline guests. In fact, when we touch on property, which we'll come to, you had Robert Kiyosaki. We all started on the Rich Dad, Poor Dad many years ago. I remember that, and the property and all of that. We've got some views to share, and we've both been in development, so we'll go there. The other big discussion that always is the one that comes up that we all sort of seeking the answer, the holy grail, the inflation deflation saga. And many people are going to say it would have been remiss of me not to deal with that. So let's get that big topic out in the open. You've had a couple of camps, some of those, Peter Schiff, for example, it's all inflationary. You might have had the Harry Dent and the likes that, or Brent Johnson, possibly a bit of deflation. You've had Lynn Alden, many other people. Where do you personally, having heard all these opinions, what's your take on how the dominoes drop on the inflation deflation debate?
Yeah, I think the simplest way to break it down is if you believe the system is going to stay exactly the way it is now, then you've got to be on the deflation side. If you think the government and the Fed are going to do whatever it takes to create inflation and they're going to change the system, then I think you've got to be on the inflation side. So for me, I think the Fed and the government will just change the rules, or they'll just ignore the rules. And they'll look at the Japan experience, they'll look at what happened in Europe, and they'll say, okay, how do we avoid that? And the best way to do it is to ban cash and come up with a Fed digital currency, if you want to call it that, and have all the American citizens have accounts at the Fed, just like the primary dealer banks and the commercial banks, so they could turn bank reserves into legal tender. So that's a fancy way of just basically saying that the Fed, through the creation of bank reserves, can now inject money directly into the real economy, chasing goods and services where now they can't do that. They're dependent upon the commercial banking system and a lot of other factors, maybe the government spending money. They're dependent on a third party, and they could also control velocity that way as well. Because if we had an app on our phone, let's say, where we were getting this UBI every single month from the Fed, creating these bank reserves and depositing those bank reserves into our account with the Fed, just like they would a primary dealer bank they're doing quantitative easing with, except here they wouldn't be buying any asset. In fact, we might give them an asset in the form of some weird type of debt just to make sure that their balance sheet balanced out at the end, but that's a whole other ball game. The bottom line is they're really printing money. A lot of people say they're money printing, but they're just creating bank reserves. But with this system, if we had that app on our phone, then let's say they're giving everyone 2,000 Fed coins, which would be the equivalent of $1 or $2,000 on their phone, then they just say, well, you've got to spend it within 30 days or it's gone. And that's the way you get velocity up. And that's the way you create inflation if that's your objective. And I think if you look at the federal government and the deficit's running probably 4 trillion plus this year, over 27 trillion or close to 27 trillion, I haven't checked lately, in the total debt. And that's just going higher and higher and higher. So at some point, the only way out of that is either default or inflation. And I don't see it too probable that the US government defaults, although many people would define inflation as a default because they're paying the investors back, the people who own those bonds and treasuries with devalued dollars.
It's the sleight of hand default, though. It's not the hard default. But isn't there the risk with the World Economic Forum and all of these people now openly talking about reset? We feel a bit put out because our logo had the reset sniper in it and had the computer button, you know, as in the reset button. And they've actually chosen the exact same icon and have gone with reset. Now you're hearing the world. Isn't there a chance that there's going to be some of the soft cheating, which is the inflationary, but there might be a real step change in a short time frame that could be a little bit of the hard reset element, and that maybe debt forgiveness, something like that, that could literally turn on a moment on a key decision as well? So could there be a combination, a blend?
Yeah, well, it depends how you're defining that. I think the short answer is yes, but it's as far as a debt jubilee, that gets really into the nitty gritty, because if you're talking about like a corporate debt jubilee, then you got the other side of the equation, because one entity's liability that is debt is another entity's asset. So how do you work that? Now, if it's sovereign debt, I guess,
if I can jump straight in, how do you work that as in the question? This all just feels like an on-ramp for UBI for both the failure of pensions, because if you think about those assets that you're talking about, many of them will be held by pension funds, government debt, corporate debt, various options. It's sort of like the whole pension scheme fails, and they could do this hard reset where everyone, okay, you're not got your pension, but in compensation for that, how old are you? Are you married? You know, this is your pension now for all your tax contributions. So that is a possible way that they just the on-ramp for a universal basic income and saying, well, you've lost this, but now that.
Yeah, I think that's most probable.
Yeah. And that is a little bit of a hard reset element. That's why I'm not sure it's just going to be the usual formula of just whittling everybody away on the wrong side of a compound interest equation between real interest rates and nominal returns, where they devalue out. They did get a way to do that in the 70s, so to speak. But the problem is the leper colony is the whole globe now. We've all been synchronized to be this totally indebted environment. And isn't it just a case of, look, it's all gone too far. It's universal. Everyone's got to go through it. Bang.
Yeah, I think that could come in the form of UBI. Again, it depends on who's holding the assets, if you're talking about specifically a debt jubilee. But I mean, you could have a lot of the debt being held as an asset on the central bank's balance sheet. And if they can take a haircut, then that could be an option. But that gets really difficult too, because then how do they sell those assets to lower base money? Right? Because if you think about the way the Fed creates additional base money, they have to do that by buying assets. So if they were just to hit the button, as you said, and all of those assets on their balance sheet go away because those are the liabilities or the debt of let's say the sovereign government, then what do they sell to decrease the amount of base money? There's nothing there to sell. So you'd be kind of set with a baseline of right now what would be $7 trillion of base money, and then that could spiral out of control into inflation, especially if you go the UBI path in addition to a debt jubilee. I mean, and that's why you asked me kind of what my opinion is. I think that at some point, whether it's in a year or 5 years, you've got to get to stagflation. I mean, you've got a structural problem with the US economy and the developed world. So I don't think you're going to get the unemployment rate back down to 3% or 4%, unless the government's just completely lying about the numbers, which I don't put that past them at all. So you've got a structural unemployment issue. And then you've got this other issue of them trying to create inflation, or inadvertently creating inflation, because they start UBI. And of course, all the Austrians and the people the naysayers will be coming out And like guys like me on my YouTube channel are saying, no, you can't do this. It's going to create inflation. It's going to create inflation. And after a year of doing it, there's no inflation. And then they're like, oh, see, we told you, you guys have been worried about this since 2008. It's never come to fruition. What do you know? So if we're not going to get inflation, if inflation is dead and we're doing $2,000 of UBI per month, why don't we do 5,000? Why don't we do 10,000? And everyone's going to be rich and we'll never have to work again a day in our lives. And we can just keep importing all the goods that we need to buy from all the other countries and just have these poor saps over there take these green pieces of paper, and then we can take all their resources by them building us goods that we can sit there and consume, and all we have to do is watch TV on our couch and never have to worry about it. What's the problem? So, and then once you get into that mindset, then all of a sudden, of course, the inflation genie comes out of the bottle, can't get her back in. They've done this debt jubilee where the Fed or the central bank can't lower base money, and then you just have an explosion of potentially hyperinflation in the main developed economies, that being the United States, Europe, and Japan.
Yeah. And as you say, it starts slowly and then it runs. I would argue and have argued that, in fact, we're seeing a lot of inflation. The basis for comparison keeps getting adjusted on the normal CPI and the Bureau of Labor Statistics, the BLS. So when you look at shadow stats that have done from Reaganomics era in 1982, in actual fact, US is facing double digits inflation, but continuing between 9 and 11%. And that's what the housewives are feeling, and the men who are buying their groceries, better not get in trouble there. And also we're seeing, as you mentioned, QE and where the money was being lent. We kind of have two balloons, and we've twisted kind of a kink where the money is being put into one half of the balloon, but not very much leaks out. And that's the banking side that's inflated, hyperinflated the stock market. I think Zoom are being valued at 90 times their current revenues, 90 sales number. So, and I remember reading a piece from Scott McNeely of Sun Microsystems Java about how insane it was that they were valued at 20 times revenue. And he was explaining, look, it still exists as a company, but it's like 85% of what it was at its dot-com peak. Saying, it would take 20 years, assuming we paid no tax, no salaries, no anything, and our gross was our net, for you to get your money back. That was insane. And now we have Zoom actually on 90, which is a lot of forward growth baked into the cake. So that's got to be counted as some sort of asset price inflation and speculation as well, in terms of the inflation number. So I think the inflation is actually there. And also the gold beginning to move is a beginning of a sign of that. But in terms of it being conscious in the official statistics, it's probably been a bit masked, effectively masked to a degree. How do you feel? Because, it's popular to say, oh, China, oh, you can't believe a number that comes out of China. Everybody yeah, nods their head. But we think that politicians in another realm won't also, and statistical departments won't come under pressure. Our shit doesn't stink, basically. How do you feel about the numbers that we actually get on American stats and European, for that matter?
Yeah, I think all governments lie. I don't think China has a monopoly on lying. I think that our government is just as guilty. We may do it in different ways, but especially when you travel around the world and see it from a different perspective. And I think the CPI, the unemployment numbers, are a great example of that. So when I talk about like yesterday, I did a video where I was talking about the Fed's 2% inflation target. And you've got to kind of compartmentalize that, because you could look at that and say, well, of course they've achieved that, if you want to call that an achievement. But then you have to say, well, they didn't achieve it, because you've got to use the measuring stick that they themselves use. And so using their measuring stick, then they have not achieved their objective. And my argument was that's because they're impotent and they really have no power whatsoever, at least not the power that the media and the general public likes to think they have. But then you could say, okay, yes, we definitely ran a lot hotter than 2%, which is what I would argue as well. And then, what's really interesting about that is inflation is very, very tough to pin down. Like what type of inflation are you talking about, and who is it affecting? And everyone's inflation rate, depending on what they spend their money on, is a lot different. And depending on what socioeconomic group they're in, as an example, if you've got someone that's making $50,000 a year, their inflation rate is going to be far, far different than my inflation rate, because what I'm spending the majority of my income on might be going down in price, such as a vehicle or something. And what they're spending the majority of their money on, being it groceries and rent, those prices are going up. So it's very tough to pinpoint. Another thing I always like to point out to people, we look at the 1970s as a classic example of inflation, but we have to realize that between 72 and 74, there was a massive bear market in stocks. They went down by almost, my memory serves me right, almost 60% in nominal terms. So you've got, you can have asset prices going down in a period of deflation, while at the same time you've got consumer price inflation, prices going up. And then if you look at the dollar relative to a basket of other currencies like the DXY, mostly against the euro, that could be going all over the place. And most people think that it's just this monolith, right? It's just this black or white thing where if we have consumer price inflation, well, then asset prices must be going up and the dollar must be going down against other currencies. But if you look at the charts and go back even 20, 30 years, you'll see that a lot of times there's no correlation whatsoever.
Yes, currencies are an interesting one that you've just brought up, actually. We can switch and bring that Dixie up just to mix it up a little bit. It's going to be quite interesting view. Let's do that. I'm going to do the share screen and bring that one up for you and talk about it, because a lot of the chats, and I know with one of your guests and one of ours as well, Brent Johnson, he has a particular dollar milkshake theory that he first feels. That's gold. So let me just get the dollar up. That the dollar first appreciates, because we're in the Turkish lira trade because of the debt that they have in dollar denominated debt, which brings in these very interesting discussions around global debt and the demand, Triffin's dilemma, the need for dollars to be proliferated outside of America, and
real estate might be interesting if you can buy in dollars.
Yes, especially if the dollar is appreciating, which it may well do. One of our scenarios actually has this particular structure that you're looking at here. I'm hoping you can see it all right, George. You will recognize it. Is that in actual fact from the lows we had a bit of a squeeze and breakout, and I'm just going to draw. Let me just get this item up. A continuation pattern right from the low period that broke up to the upside and make its targets. And we have a suspicion that there may in fact be another one forming. It was a little bit of an abrupt sell-off recently. So if I'm just drawing here, this was a great structure that gave a very clear-cut run. And this was just a lovely move from 79s all the way right up to 99s, touched 100 and plus. We're asking the question, if the Brent Johnson school of thought on the dollar milkshake theory is accurate, have we maybe just bottomed, and we're kind of in some form of a trajectory that makes a third but maybe less dramatic high before squeezing in and having an upside move, if you can see that. Where are you playing on the fall of the dominoes, seeing as we've stumbled into currencies, because it's a very interesting one. The order. Does the dollar, if we have the FX emergings failing and they're on the outside of the circle and it's proliferating, are we going to get the core currencies, particularly the dollar, the global currency where they're in debt, first go up and have that moment where we have Bitcoin, gold, silver going up in dollar terms on a rising dollar? Or are you of the view maybe more like a Lynn Alden, where actually having reversed Fed policy, which is more a fundamental view, and fallen in line with everybody else, that the dollar's maybe a bit overrated, a bit of that Triffin dilemma benefit that being a bit supervalued needs to be let out if it's going to lose some of that sole currency power? Where do you stand?
Well, it's tough to argue with Lynn. Lynn's one of the smartest people I've ever seen in my life. But so is Brent. I'm partners with Lynn in a project called Rebel Capitalist Pro, and I'm good buddies with Brent. They're both just incredibly intelligent people. I got a massive amount of respect for them. But I think it really boils down to a geopolitical question and maybe on the fiscal side. And it goes back to what we were talking about earlier. If the system stays the way it is for whatever reason, I think the dollar is going to be very strong. I don't know if it goes up to 130, 140, because I think, and I've talked to Brent about that, because I think if it got up over 110, 115, I mean, that would create so much pain that they'd have to come in. They, meaning the whole entire, global financial elite would have to come together and say, listen, we've got to come up with some sort of Plaza Accord 2.0 to decrease the value of the dollar, because this just isn't working out. Also, too, I've kind of did a few thought experiments in some recent videos where I thought about, from the US standpoint, and assuming that they wanted to maintain global reserve currency status, then it doesn't really benefit them either for the dollar to be this strong, because I looked at it as like a dollar PTSD or whatever the acronym is, for the post-traumatic stress syndrome, where these other countries and corporations who took on all this dollar-denominated debt just get absolutely crushed if the dollar's up at, let's say, 120, and they're like, listen, we never, ever, ever want to deal with this ever again. No matter how much additional pain we need to go through, or no matter how inconvenient it is to stop using dollars moving forward. And it's not just a dollar issue, it's an infrastructure issue. But to get rid of this dollar global infrastructure and euro dollar system, we need to come up with a different plan, because we're not going through that again. And I think if the people pulling the strings in the United States are smart, and that's a big if, I think they could see that and know that, listen, there's a sweet spot here where we don't want the dollar to completely collapse, meaning go down to 60 or 50 within 2 or 3 weeks, but we also don't want it to just break out and go up to 120. So we've got to kind of try to manage this. Now, the challenge with that is the United States doesn't have pretty much almost zero FX reserves. I mean, the last time I checked, they had the same amount of FX reserves as Colombia, which was right around $40 billion, which is comical. So it would be tough for them to defend the currency on the way down if that were to happen. Now, on the way up, I think you'd have to think through the mechanism there, but whether it's the New York Fed creating bank reserves and somehow turning that into cash, flooding the international market with dollars to bring the value of those dollars against other currencies down, something like that. But I think they try to manage it there before we got up to the 120 mark. That's kind of my point here. But I think it really is a policy question. I don't know that it's a fundamental question, because before the fundamentals, we get to that fundamental end game, whatever it is, I think they're going to step in and try to intervene. So I think you got to kind of look at game theory more so than charts and fundamentals. But if I was going to give you kind of my what my opinion is as far as the most probable outcome, I think you stay in a range between 100 and 90. And if it breaks the range, I think it's most likely to break on the downside because of what we discussed before with UBI and the Fed creating a Fed coin, and them trying to look at Japan and Europe and figure out how do we avoid that deflationary spiral for decades and decades and decades, and them erring on the side of too much inflation, and then it gets out of hand. But again, let me preface with saying, in order for that to happen, the system has got to change. I totally agree with Brent and Steve Van Meter and Lacey Hunt, where if the system stays the exact same as it is and the Fed abides by the rules, then it would be really, really tough to create that type of environment.
The other thing that holds your theory too is you wouldn't need to see 130 or 140 at all. The debt levels have got so high internationally as well. I mean, Turkey's already in huge distress. that even if we got to 105, 106, there's going to be some of the weaker dominoes completely capitulating and going into Argentina type situations, nations that maybe haven't in a while. While we might expect that from the Argentine, you'll have the South African rand, the Turkish lira. We're going to have a whole bunch of currency failures. The sensitivities have become so much that FX markets might get highly compressed, and that the overall volatility in their range gets very managed to a point where the long-term trends tend to not exist anymore, and there's a lot of range trading and almost pinch trading as we get deeper in it, until eventually it sets up a cataclysmic event because you get such a tight overall. I've noticed, for example, I don't know if you have a view on this, and I did bring this to Brent's attention, who's a dollar bull. He's a bigger gold bull, it has to be fair, not to misparaphrase him. But he feels the dollar is of the fiats, the one that climbs before it fails in that sense. But I did highlight to him that the yen, we seem to have perpetual tightening. I'll just bring this on because if FX is interesting and we're all engaged. You can see here on this annotations that I've done is that since the head and shoulders here and the proliferation that the Japanese committed to do, we've largely been in a 1045 holding. Every time we trade here, we've been bounced back up. In other words, it's almost like plunge protection to me. I'm a bit suspicious of things that look like pegs, but there's no official policy being declared. And the interesting point is every time we've had a bit of a fear moment prior to the 2018, before it happens, I see a run into the yen and the dollar selling off. Again, over here, 19, the end of 19, you may remember that moment. Then we had September of 19. It was a very busy year. Then we...
Repo market right there? Was that when the repo?
Yes, September 19, that's exactly it. And these things have always highlighted, this is my fear index almost, the USD JPY, and the falling of the USD JPY has been a precursor of a next fear deflationary type event. But you first have to see the yen strengthen and the USD JPY come off. The net outcome, once it hits that level, is plunge protection every time. And you can see it's been bought up, it's been bought up, and it's been bought up every time as it goes there. But the highs, as I'm indicating in these arrows, keep getting compressed lower. So the buoyancy out of this is reducing. And this ties into the sensitivity of Forex markets as we're getting deeper into the hole, because the degree of movement, the tolerance for any major movement in the major currencies seems to cause the pips to squeak a lot sooner. And this just points to we're getting huddled into a very small wedge of an apartment, and the deeper we're going in, the less room to breathe there is. And this all feels like a precursor, which is why I come back to that hard reset element where they just have to say, damn, and then we get a major explosion. We can't carry on. The headroom's too tight. And Brent, who's kind of the dollar maximalist, if I can call him that, of the fiat, I was just saying, well, there's this thing I've seen the yen also shake. The interesting part about the yen is they don't rely on international market to sustain their debt. It's the more self-contained Ponzi scheme, if that makes sense. In other words, the aging Japanese population are happy to hold the government debt and have held the other side of that, and they're not reliant on foreign buyers. And there was the carry trade when there used to be interest rate differentials, which we no longer have, and it's sort of set up an establishment. Now, I don't know, do you have a Japanese view, or it's not come onto your radar?
I don't look at Japan too much. I mean, this is very interesting. One thing that I'd want to mention, going back to what we were talking about with the dollar exceeding 105 or 110, and Lynn makes this point very well, that there's a lot of dollar, we talk about the dollar denominated debt. There's a lot of dollar denominated assets outside the United States as well. And I think Japan would be one of the biggest holders of dollar denominated assets. They're the biggest creditor nation, to my understanding, in the world. So if there is, it depends on the country. You've got to really look at what their balance sheet has on it. And a lot of those countries that have a lot of dollar denominated debt could have a lot of dollar denominated assets in which the Fed doesn't want them to sell. Because remember, the Fed is trying to keep the interest rates down and peg the yield curve. And if you've got all these countries selling treasuries to get the dollars they need to pay off their dollar denominated debt, then that's bad news for the United States. So you have that dynamic maybe keeping the DXY in check as well.
I just feel it's the wrong nations. Turkey doesn't have the assets. Japan will have the assets. It's kind of the wrong nations in terms of that argument. In other words, it's a polarity of extremes. You can have failure for those that are impoverished and are on the debt handle. It's kind of like the working poor and the billionaires, and we're somewhere in the middle there. The food inflation is killing the low end. You and I are buying motorcycles and cars and traveling, and that's cheap relatively in an inflationary sense. I think those countries are slightly different. It's just really interesting. I leave it out there. It's something we've specifically noticed as the HVF method traders, that it's our early indicator for a distress moment. And each time the recoil is getting ever less. So the buoyancy is going out of it. And when I challenge Brent on this discussion on one point where I depart slightly, is that actually there's the yen may have, in some senses, an edge on the dollar in the milkshake event. You might see both go.
Well, I think if you look at the fundamentals of Japan, it's very interesting. And I obviously you can't wave the magic wand, but if Japan somehow had, call it 100% debt to GDP, fundamentally they'd be a rock star, because it's from a currency standpoint, because they have everything that you'd want for a strong currency. They are a huge exporter nation, so you always have fundamental demand for the currency, contrasted to the United States that has, other than the world reserve currency, we'd have zero fundamental demand. Quite the opposite, because we have a trade deficit every single year. We import a lot more than we export. Therefore, what we are exporting is those dollars going out to the global market, which typically would bring the dollar value down and our interest rates up. But so, again, you're looking at the balance sheet or the P&L of the financials of the individual country, and you've got to look at it country by country. You can't just.
But I would almost say they're more likely to be accurate on their debt. So their high debt levels are probably a greater reflection of the truth. The Boston professors, well before the recent proliferation that's gone on in the States, had the real, when you take in welfare, Medicaid, and full commitments that have been made on the US at 600+% in real terms. If you take all the unaccounted for off-balance sheet items, So I don't get the same feeling that the Japanese have bent the numbers to quite the same degree. I don't want to call any government honest. I don't want to fall into that trap. But I just have a sense that there's so much more that's not accounted for in America. To say that the balance sheet is better, otherwise Japan is awesome, is probably on their measuring stick, where they've just got away with a bigger lie in my version of events. So it's an interesting story.
Yeah, Japan definitely could be the least dirty shirt when you're looking at all of the developed worlds.
In some ways, we're both in the same park, in that let's not go for the shirts, let's go for a bar of gold. But it is an interesting, I see it from a trading perspective. What order are the dominoes? How do I want money to flow in the order of failure? So I'm interested in the synchronicity, or the order, the firing order of the V12 we bought here, George, bringing automotives in here. What's it? An AMG. Well, let's call it an AMG block, shall we? I like to know the cylinder firing order so that we can geek out a little bit. That's going to be fascinating.
One thing I really like about Japan is they're not going to have to worry about social unrest. And that's one thing that I really am concerned with in the United States, especially going into an election and going into some high profile trials here. I think you could get a lot more rioting, a lot more looting, and that's a lot more divisiveness. And that's never, ever, ever, ever good for economic growth. And that's one variable that I don't think you have to worry about in Japan.
Yeah, very orderly. Their demographics are awful because they're just not doing kids. So from a point of view of that, but that's many people have looked at growth as at sort of demographics. But I think in terms of order and lifestyle, they're also closer to the Sweden on the CV19 closed down, less draconian. I get the impression. They've been very compliant. They comply very well, but they seem to be quite relaxed if I look at James Corbett out there and the reports that I'm getting back on there. Anyway, let's talk about something else that was fun looking at the FX there. Property. Yeah, thank you. Property. As a man of the brick and mortar, I'm quite a bear. I feel that when you have these big cyclical change, it feels like Bolshevism coming. And if we think back to the communism of the Russian 1917s, it feels like a lot of people are going to get squeezed out. You did a very interesting previous YouTube, and we'll include that link in the notes. Go watch George's clip. He's highlighting the disorder that he's just referenced again today, and also flight from blue states, particularly California and New York, the highly urban areas. That's going to cause a net seller, an overhang of sellers. We've also got, because of the CV19 event, let's just leave it there and not get too deep down that rabbit hole. You're going to have a lot of people that won't be making rent checks, and you're having this socialism stroke, I call it masked Bolshevism, because we've got some Marxist funded groups, all sorts of things that's saying, well, you can't dehome someone just because he can't pay, which immediately means the normal capitalistic process of repackaging the assets and getting someone who can pay can't occur. Then the owner says, well, I can't pay my mortgage now because you're not allowing me to oust a tenant who's not paying. So what does the bank then do? And it brings us back to an interesting part of the discussion that you mentioned earlier about how QE was just stacking up on the balance sheets of the intermediary being the retail bank, the transfer mechanism between us and the Fed. And in some senses, I've gone forward and said I forecast the retail banking as being the tail of the lizard that gets forfeited with the coming cycle change. Because that will open the way for many of the things that you were alluding to. In other words, direct payments from central banks to citizenry, and they can sack. Yep. Yes, and mortgages. So you're going to have this landlord with his investment property. It's no longer going to be worth much. He can't sell it. He can't sell it vacant, empty, because you can't evict the non-paying. Some of them might be enjoying the wacky tobacco that you were referring to in yours. It turns into a bit of a den. It's kind of Detroit 2.0. And what then happens? Well, you've set the scene for a retail banking blowback, which is a perfect example. Toxic bank becomes toxic retail banking system, if it isn't already toxic, when we add the possibility of this pandemic. And some of this is also now happening on commercial property. And that's because the SMEs are squeaking and some of the bigger tenants saying we can't pay the rent. Some areas have actually said commercial landlords may not oust businesses. So we're kind of getting this on a two-pronged level. It does seem to point and play out, to the on-ramp again of UBI, and maybe UBI even for corporations, that make every corporation a government-owned corporation, because if they start to sustain them by some degree, they're saying they're a creditor, they have priority over the shareholders, they then can demand a seat on the board, and we end up with government in everything, and the Bolshevism is fully complete. And then you end up with UBI for corporations or small, medium enterprises, or the bigger enterprises even more so. We saw that in Too Big to Fail. We see that in BlackRock now doing negotiations with Argentina on the debt owed to America, which is actually a private organization and is also being classified as too big to fail. So are we seeing the sweeping plan that turns capitalism into a Bolshevik state where there's a government minister, much like China, on the board of every person, business that ever takes the UBI check? In other words, the UBI comes with strings, and it ends up being the end of capitalism because the powers that be end up being resident on boards and as part of a managing structure.
Yeah, well, I think that it's a lot easier to understand for the average person if instead of using the word capitalism, we use the word free market.
Yeah.
because a lot of the Fed's intervention or bailouts of the banking system in 2008, or what they've done, let's say Boeing, the airlines here with this recent COVID issue, you know, the Bolsheviks, to your point, like to point the finger at capitalism and say, oh,
Yeah.
look at this is why it doesn't work, when
Yeah.
we know that that's the opposite of
Cronyism.
capitalism. So I
Yeah.
think if we just use the word free market, it
Yeah.
makes it much more difficult for them to make that argument, because you know,
Yeah.
how could you say that, oh, well, the free market doesn't work? Look at this, what happened when the Fed came in and bailed out these banks.
Yeah, it's a difficult sell, that line, isn't it?
Free market, that's what are you talking about? So I think
Yeah.
it would make it much harder for them to spin if we use the term free market. But also, too, going back to your point, I really think through if the Fed can't take all that onto their balance sheet, or at least give it a shot. And we've got to realize that the big problem you have right now with the retail banking system is people not making their payments. So you know, they can't take a haircut because that's an asset on their balance sheet. And if too many of those loans go bad, then of course the bank is bust. They're completely insolvent. And so to get around that issue, they could come up with all these band-aids and government intervention and programs. I totally agree with that. But they also could take those the debt or the assets and move them onto the Fed's balance sheet, where there really wouldn't have to be any form of repayment. Now, they could say, we'd like you to repay, but if you don't repay, whether you're a corporation or you're a homeowner or you're a landlord that owns a commercial building and your tenants aren't paying because there's a lockdown because of the virus or whatever, you know, they could say, well, we'll kind of negotiate that, and it's not as much of an issue because the Fed can take an infinite haircut. So I think that we've got to think through a lot of different scenarios here. And number one would be much more government intervention, which I think is I mean, there's never 100% certainty of anything, but I think the probability is extraordinarily high that regardless of what direction we go, we're going to have more central planning. We're going to have more government involvement. I mean, I'm here in Phoenix, and I usually spend most of my time outside the United States, so I don't hear any political ads or any of that nonsense. But I actually was listening to the radio the other day, and I heard an ad for Joe Biden. And I'm not here to say he's bad or good, or I dislike both parties equally. But I noticed that in this ad, it was talking about how that we are not safe under the Trump administration, and that if Joe Biden is elected, that he is going to put our safety as priority number one. And every single time I hear that ad, it takes me right back to that, I think Benjamin Franklin quote, where he says that, you know, people that favor safety over liberty deserve neither safety or liberty, you know, or something.
Yep, no, you've nailed it. Yeah, that's it.
But so I think that you're just, and let's be honest too here. I know there might be a lot of people that are pro-Trump or Republican, but hey, guys, I hate to break it to you, but he's almost as close to the left as far as being in favor of big government, central planning. I mean, he's a big government guy. So now the two parties in the United States aren't necessarily small government, limited government, and then bigger government. You just have, do you want big government or huge government? Now those are your two options. And then you look at the deficits, and most people don't equate the deficits to GDP, but I think they need to really think that through. And what I mean by that is, if the deficits are going through the roof and GDP is going down because of a recession, then what you're going to have is the government spending becoming a higher and higher percentage of overall GDP. And prior to COVID, it was right around 50%.
Yeah, it's half.
50% of the GDP of the United States is due to government spending. In other words, not part of the private sector, where we're actually producing goods and services and becoming more productive and more efficient, which is what you'd want from an economy. So if you take that to an extreme and say, well, what happens if the government spending is 100% of GDP? Well, we know what that looks like. We can just go back to Russia in the 1970s and 60s, 80s. We know what that how that end game plays out. That's 100% of government, or 100% of GDP being a result of government spending. So every percentage point that we get closer to 100, we get closer to communist Russia or Marxism, and then we get closer to more and more total 100% government control. So now that we have these big deficits and we have the recession, we have the GDP going down in the private sector, I would guess that if we, at the end of 2020, what is government spending going to be? Is it going to be 60%?
Well, it's double income. It's double income every time. In terms of tax take, they're spending twice as much. So they keep adding to it.
Yeah, so by definition, if you just look at the numbers, then the government has to play a bigger role. And whether that's being a part of the board of directors or being equity holders. I mean, we look at Japan, and we talked about some things I like about Japan. Let's talk about some things I don't like about Japan. And that's that the central bank owns 60% of the JGBs, and they're buying ETFs, and now all of a sudden they're controlling through the ETF ownership, now they're controlling, voting for shareholders or voting as shareholders. How does that play out? And if the Fed steps in.
But how about the Swiss owning Apple stock? At least the Japanese are buying their own market. You've got the Swiss National Bank now turning into a hedge fund and buying high-flying Apple stock. What happens if we get a real reval in PE ratings and all of this? I mean, it's not just Japan, is it?
Yeah, let's not forget the Fed's buying their debt.
Yeah.
So, yeah, great. The Swiss is buying their equity, Apple, but the Fed's buying their debt along with Microsoft and all these things. And now, if you can figure out why the Fed needs to buy Apple debt to support Apple, that's got what, 100 billion in the equivalent of cash on their balance sheet. I mean, that's a head scratcher right there. So I think moving forward, we're at some point in time, I think it's probably within the next year or so, the Fed will start buying equities. Now, whether they do that through a special purpose vehicle and just kind of ignore the Federal Reserve Act, like they have been doing with junk debt and corporate debt, who knows how they'll finagle it, but it'll be some sort of shell game, some sort of smoke and mirrors, where they're trying to say that they're abiding by the Federal Reserve Act, while again, a third grader could look at what they're doing and saying, no, they're completely being dishonest, and this is not in the spirit of the law, to say the least. But I think that's coming down the pipeline. So at what time, or what happens when the Fed is a majority shareholder in XYZ business, and now all of a sudden they've got the social welfare of the United States, or whatever the current political narrative is at the time, coming down and pressuring the Fed or the government, whoever owns the equities. So as an example, if we want more quote unquote equality for women, I'm not saying this is a good or bad thing, but then now all of a sudden we're forcing every single company to have, maybe hire at least 50% women.
Yeah. The woke agenda moves forward at record pace once government is your primary creditor, because in essence, it's no longer about business and value add. I mean, it's just, I'm taking one step back and I'm almost saying, what do we train our children to do? Because we always said meritocracy, be awesome, give value, have a business, do something valuable and grow it. And we're moving into a world where essentially government's going to take on debt. The ECB has been buying, Volkswagen and all of their debt. When you own the debt, you have priority. If they crash the market, which they're more than capable to do, the creditors are in charge. So you can actually have an entire Bolshevik revolution where all the major corporates then come under government rule. And then you play color politics, you play gender politics, and the business survives regardless. But there's got to be, smarties. There's got to be a red, blue, and pink. And
That's a great point. The ownership changes from the private sector to the government, and then bam, you have inadvertent or maybe explicit, maybe that's part of the game plan, to transition into pure socialism where the government owns the means of production.
yeah, and we all know how that ends because we've seen how well they've done on government-specific things. So when the incentive and the directive to give the customer the absolute best and have the highest meritocracy individual to complete the job in that role no longer is the overriding, and you're now doing transformation, and unfortunately, I've got a little bit of experience in this coming from South Africa and the empowerment that they did there and the things that they insisted. They actually just added huge layers of cost, huge complexity. A lot of people retired and became consultants to continue to do the work that as yet untrained people weren't able to do. And it became a cesspool for corruption. So much so that accounting companies, big branded, the KPMG, PwC, all ended up on the take in various forms with government tenders and all of this, and it just becomes a very, very corrupt, almost one of the stars in the mountain of communism. It doesn't end at all well. And I'm starting to think, should we be training our kids to be political animals, to survive in the jungle and be entrepreneurs where they virtue signal and do all the wokeness, which is absolute anether to me? Or do we go like Atlas Shrugged and go find that piece of land where meritocracy and serving others to the highest and the best sees you win out? And it's just a bit of a dystopia. I feel lack of optimism about global economic direction across the board, and the problem is it's almost globalized. I don't know how to arbitrage this. If there's capitalist land, or let's not use the phrase capital, let's say price discovery mechanism land or free market land, where is it? Because I want to get onto a Learjet and go straight. You can drop me with a parachute and I'll work my way back up. But how do we handle this?
Yeah, I think you have to look at the trajectory of where countries are going, not necessarily take a snapshot of where they are now. And I think as investors, especially global macro investors, that's what we need to do. So as an example.
Where's the positive trajectory though?
Well, I think it's Saudi Arabia. I think Russia. I think if you look at that whole part of the world, that they're doing some things that are interesting. And again, I'm not saying by any stretch of the imagination that right now Saudi Arabia has more free market capitalism than the United States. I'm not saying that, but I'm saying look at what they're doing. I'm a big fan of the UFC. And Saturday night, I got the pay-per-view, and sure enough, it was right there in Abu Dhabi. And they built an entire island in Abu Dhabi to host the UFC.
It's the second one I think they've done as well. They said, "Hey, everyone else is closed for business. We'll build it and make sure it's open for business." And that's a can-do attitude, isn't it? Where's the can-do attitude?
And I've also, I partner with Lynn, and I also partner with a South African named Chris McIntosh. And his sister actually has lived in Saudi Arabia for quite some time, over a decade. And she's talking about how they're even considering building casinos, like proper casinos with gambling and alcohol in Saudi Arabia. Now, they obviously they're not there yet. But that's an example of a country and they might not get there. I'm not saying they're going to be, the Atlas Shrugged of the entire world, but I'm saying that's an example of a country, that's maybe not great now, but at least they're going in the right direction. Georgia is another example of that, where I was talking to my good buddy Andrew Henderson the other day with Nomad Capitalist, and he was talking about how you can set up a business in Georgia in like 20 minutes, and they even set up a drive-through with the local government thing where you can download the paperwork online or download it to your computer, print it out, and then just go right through the drive-through, submit it, and bam, you've started your LLC. It takes you 10 or 15 minutes, and you're good to go.
They're also outside the common reporting standards, which America has refused to sign. which is really useful, Georgia. And on Saudi, just going a step back, I don't know if you heard about the Neom project, the city that they're building. It's on the south side in the, I'm trying to think of the Red Sea. And they're going to go, it's an entire city, and it's going to be almost tariff free. It's going to be this entire city that will be very modern. It's going to have the sort of the monorails and a lot of the Elon Muskery blue sky stuff, the very green and all of that. And it's going to be a place, and I expect it's going to be quite westernized. And it's going to have a similar legal system that they want to develop. So it's quite interesting that, because it's going to be a key area with China Beltway, all of those places. So there seem to be a lot of interesting projects.
I think the treaty they just signed with Israel is huge, massive. I mean, it didn't get much airtime here in the United States, but I think it plays into their long-term vision that they need military backing. And I talked to Chris about this as well. And Chris is under the belief that they have gotten their military backing mostly from the United States, and they see the United States as kind of a sinking ship. So they're like, okay, we need to have some sort of partnership locally where with a strong military. And so the strongest military in the region, of course, is Israel. So they do a deal with them, and hopefully it leads to more peace in that area, in which case these things that we're talking about can flourish. Russia's, I know, especially Americans really like to hate on Russia a lot. And I want to be very clear, I'm no fan of any government whatsoever, but I do like their balance sheet.
Yeah, and the gold, backed by gold and no debt.
Yeah, great balance sheet. So I do think there's hope there for a global macro investor. There's areas of the world to look at, start maybe kicking tires, and to potentially be excited about. I think Colombia is another place that could be very interesting. Last time I spoke with Jim Rogers, he mentioned two cities that are his favorite right now. I believe it was Vladivostok, if I'm saying that correctly, in Russia, the port town, and then his other was Medellin. And they definitely have some problems and some issues in Colombia. But again, I'm there. I've been there on and off since 2015, and I can tell you that the things they're doing in Medellin and in Colombia in general are definitely pro-business. They're building out badly needed infrastructure. And if they could just get by this whole virus issue, they've been a little too draconian for my taste on that. But if they could just get by this, I think they've got a bright future. So there is areas outside of the developed economies where I'm pretty optimistic.
It's great. It's very interesting you mentioned those two. We did have a little preliminary chat on Medellin. Most people that don't know and don't watch the kind of people that we watch, just for their benefit, you can purchase unbelievable freestanding homes and apartments for very, very low sums. I remember when I looked into it, that was about 2 or 3 years ago. I never followed up. I have been to South America since for a number of reasons and have scouted around. But is it still feasible to buy for $50,000 freestanding home in Medellin way? George, what are the prices like?
Well, it depends where you're looking. I don't know about a home. You could definitely buy an apartment, especially with the dollar as strong as it is.
Yeah.
I mean, you're talking about maybe close to 200 million pesos. Definitely. Now, if you want to go in the really good area where I like to invest, because again, it's about location as well. I don't know, you're not going to be able to get anything for that, but excuse me, it's not just how cheap it is in dollar terms, it's also your ROI, because at the end of the day, that's what's important. And so if you know what you're doing in a market like Colombia, a real estate market, you can make huge returns, not just on cash flow with rents, but also if you're just fixing and flipping. And when I mean huge returns, I mean 10 plus on your positive cash flow very easily. And that's if you're doing long term. If you're doing Airbnb in short term, it could be much higher than that. I've seen guys get 20 plus all day long. And then if you're doing a remodel and then selling it, I've gotten 8 80, 90% returns, almost 100% returns sometimes on an annual basis. Now, why is that? The reason is because it's such an inefficient market. So let's take an example of gold or a currency market or a stock. You know, if gold is trading at $2,000 an ounce, you can't find anyone that's going to sell you an ounce for $1,500.
No,
It's not going to work, right? The market is completely efficient. And in the United States, the real estate market is more inefficient, but you know, especially when we're in a bull market, or I would consider a bubble in U.S. real estate. If you've got a house that where the comps are $200,000, even if you need to liquidate it fast, you got a super motivated seller, you might be able to get it for, let's just say 175 or 180, something like that, where you got a little bit of built-in equity, but not much. But it is less efficient than the stock market or the gold market. Now you take that to an extreme in a market like Colombia, where they don't have an MLS. Who knows what's going on with real estate agents, and 80% of the properties that are listed that are for sale are not even online. In Medellin, the way most people sell their property is they just put a sign in their window, literally. That's it. So why do they do that? Because almost 100% of their net worth is in their property for the entire family a lot of times. And so they don't want to give the 6% commission away. And it makes sense. I mean, if you had 100% of the net worth for your entire life in your house, would you want to give up 6% just to sell it 6 months faster? Absolutely not. You just put a sign up in the window, sell it yourself, and pocket the money, because you know, that's what you've got to live on for the rest of your life. So that's kind of the mentality there. So my point is, if you can find a motivated seller in an area that's got that inefficient a market, that is highly illiquid, meaning that even if you've got a great property in a great area, it's still going to take you 6 months to sell it, if not a year, most likely. But if you've got someone that's desperate for cash, if you come in providing that liquidity, now all of a sudden you've got a $200,000 property, and you can get it for 100. You can get it for half price. You can get it for maybe 125, something like that. So although the motivated sellers are far and few between, because there's very little debt in the system, you can find them. So my point is, if you know what you're doing, and that's the key, because if you don't know what you're doing, then the inefficient market
works against you. Yeah, it's like anything,
to say the least. That's right. You're going to have to grab your ankles. You're going to get screwed big time. But if you know what you're doing, then you take advantage of it, and then there's some huge returns to be made there.
So in actual fact, what we're saying and concluding on property is that in non-normal, deemed by Westerners markets, in the exotic markets, there is actual real upside in residential property, certainly, and in flipping, and even in yields on rentals and good payment. And I can say the horrible tag of, you know, the Colombian drug wars hangs heavy unnecessarily today on Colombia, and is one of the reasons you buy for so cheap, because they're a long way away from that now today in the right areas, certainly. Not to say that there aren't small crime things. As a South African, I'm very aware of how localization occurs. But that in the Western, say the US, commercial property in New York, how would you like to hold that right now at the moment?
Yeah. Any urban area, I would not want to hold real estate right now. The U.S. market is very interesting in that, because of the regulations and the restrictions on development, land prices are through the roof, and the price to actually build a house is ridiculous. So here in the United States, they've got this narrative that's, oh, well, everyone, the politicians and the people who really don't understand how economics works, they're all pissed off at the builders because they're not building any of this quote unquote affordable housing, when it's pretty basic. If you can't make a profit building a quote unquote affordable housing, you're not going to do it. So the only way to create this is to reduce the amount of regulations that you have. But I don't see that coming down the pipeline at all in places like California, Oregon, Washington. So I just did a video on this, that I mean, I mean, can you imagine a scenario where a builder is going to be able to build a home in LA, as an
Yeah.
example, like 1,000 or 1,200 square foot ranch? It's never ever going to happen again. So you're going to have this this bifurcation in the market where there's no supply coming online for homes under 2,000
Yeah, the
square
low end.
feet. And
Yeah.
all the homes that are going to be coming online will just be McMansions. So
Yeah.
we could see this situation where the real estate market for the average Joe is just becoming more and more and more unaffordable, where the price per square foot for the rich people, it's pretty much staying the
Dropping.
same,
Yeah.
if not going
Yeah.
down. Yeah, and
Yeah.
it's unfortunate. I showed a chart in one of my videos the other day that was really shocking even to me, and that the home ownership rate, and this is a Fed chart as well, so from the St. Louis Fed, excuse me, the home ownership rate parabolic up to like 68% from 63%. I mean, it's a moonshot straight up. While at the same time, the vacancy rate is plummeting. You see, so if you think that one through, if you've got the ownership rate going up, then the vacancy rate should be going up as well. But if the vacancy rate is going down with rentals and the ownership rate is going up, what does that mean? There's no supply. There's absolutely zero supply. So now this isn't necessarily an argument for going out and buying a 1,200 square foot house, because at the end of the day, my investment philosophy is you just buy things when they're cheap and sell them when they're expensive. And you don't really get hyper focused on whether or not the price is going up. I think that's more of a trading
Yeah,
mentality.
that's a gift.
I
Yeah.
definitely wouldn't want to do that in real estate. But there is an interesting argument for the prices going up in that specific sector.
But what about rental property? Do you not concede that maybe the cash flow model and all of that with the governmental direction? Because what in essence we're concluding is that government is overreaching and is going to continue to overreach until they create their own destruction. In other words, the fire has to burn itself out. In the essence, and this is in the socialism, I've called it Bolshevism, because socialism is sort of this interim step of government of everything in everything, just like we're going to have internet of everything and in everything. So in some senses, we're just going to be spywared out in every essence, and at the same time, governmented out in that you can't base on an income stream that might actually be culled. Rental controls, you've had it already in America, in New York and various areas. These things could all come back. Because that's the trend direction. That's what Biden is showing you. And Trump is not small government himself. He might be slightly less intrusive, but that, the one shepherds you into the other. As you say, then I don't have a dog in the fight. Government is government and they're not to be trusted. So I'm overall more bearish the category in the US and the West generally for the overarching trends. And it just puts more of us to crowd into Bitcoin, which we haven't discussed, gold, silver, and the tangibles on a UBI proliferation likelihood for both corporations and everything else. Having brought up crypto, you're a fan. Any comments you want to add on that asset class that wouldn't be immediately obvious?
Well, first of all, I definitely think we have a very similar worldview. Now that we've been talking here for a while, we have a very similar worldview for sure. As far as I think there's some interesting things we could talk about on that rental property topic as well. But moving on to crypto, I think that you've just got to ask yourself why you're owning crypto and why you're owning gold. And I put those two together because that's always the argument. And
Yeah.
you've got the Bitcoin bugs, as my buddy Peter Schiff likes to call them, or the gold bugs, and they kind of battle back and forth with. And ironically, I think they're pretty much all on the same page as far as their worldview, but they just see one winning out. And I don't really see it that way because I don't think they're competing asset classes. To me,
No.
I like to separate my portfolio into insurance, investments, which I define by things that pay me to own them, and then speculation. And I think for me, gold is the ultimate insurance policy, and about 10% of my portfolio. So that's just I think you buy gold to stay rich. You don't buy gold to get rich. And that even if you're not rich, it's all about maintaining your purchasing power. And I think Bitcoin, on the other hand, I don't see it as digital gold. I think it's way too volatile for that. Now, it may be in the future, but I don't think it is right now. But I do see it as a good speculation, because the way I define a solid speculation is by a lot of asymmetry, where if you look at the upside relative to the downside, it makes a lot of sense. And so I think Bitcoin would fall into that bucket.
Yeah, so speculation and the other one insurance. On the insurance side, I know a lot of people keep saying gold is an insurance, and I just think, why not just over-insure? You know, you've got 500,000 house, insure it for 5 million, because the government's coming to burn it anyway. May as well just be overweight. I am quite overweight precious metals, not just for insurance, but I think for enrichment as well. Your insurance policy can bring you in an upgrade as well as maintain. The notion that we'll just maintain this living, I think in the cyclical turning, just overweight. I've gone overweight on the metals, and I am overweight in crypto in terms of an allocation, even though I'm not actively involved. Do you watch any of the other cryptos, or is it largely Bitcoin for you, and that's geeky, and you know, I mean, you're aware of Ethereum or any of the others, but you're not chasing into, you know, the minutia of new shiny new coin thing?
No, I don't really get into that too much. But the one thing I would say, going back to gold, though, I think people need to think through, and especially if they're U.S. citizens, and this may be different for people who aren't U.S. citizens, but let's say gold goes to 10,000 an ounce, and you bought it at 2,000 or whatever. You could say, well, that's going to be fantastic, because I'm going to be rich, and I'm never have to worry about anything for the rest of my life. But what if I said that it only went up in nominal terms with the rate of inflation, and then to leverage the purchasing power that you now have, you have to sell it, and all of a sudden you have to take a 30% hit on cap gains. So you're only pocketing 7,000, which if it went up only in nominal terms, meaning that in purchasing power terms, you've actually lost money. And so I don't, and I'm not saying that you shouldn't.
On that point, though, I get what you're saying.
I think people need to think that through.
Yeah, on that point, I do get what you're saying, but wealth is a relative thing in a certain degree. If we all have Bugatti Veyrons aren't special in an automotive speak. So wealth is a kind of relative thing. So in some senses, we just need to be significantly better off than the lowest common denominator through virtue of that. I recognize what you say about nominal. I don't think that'll happen. I think what you'll have is a hyper demand, and you'll have an overshoot, because this is what markets teach us. Instead of just being naturally one-to-one insured at a nominal rate, what you actually have is you have an underappreciated asset that suddenly becomes overappreciated. And that's the nature of these things, that they oscillate too wildly, and there's volatility, and then there's a sudden dawning of realization. So I think there will be an enrichment anyway. But let's just go back to your hypothesis. Let's just say it only tracked inflation. In essence, it would be the overall cost of living would probably have to come down for the masses. So even if you've just retained value, lesser tax, let's say, that would be bad tax planning on your behalf. I'd also comment, and there's lots of things to do that you should be doing to prevent that. Those people that are left that took no insurance at all will still have to have sufficient UBI to eat and feed. So overall, I think it will be a resetting of the overall cost of living, which should still see you appreciate relatively, if that makes sense.
Well, I see that. I see the cost of living maybe going up with the price of gold, or gold going up the price of the cost of living, but assets potentially coming down. So even if you were to sell and take a tax hit, if you wanted to parlay the purchasing power into other assets, they could be at a lower price relative to gold. Another thing that I'd like to point out, I spoke with Lynn last night extensively, Lynn Alden, and I was asking her how she values gold. Like, how do you determine whether or not gold is quote unquote cheap? Because both of us have that same mentality where we like to buy things when they're cheap and sell them when they're expensive. And this is if you're not looking at gold as specifically as an insurance policy, but maybe more so as a speculation. Maybe you put silver into that category. And what she does is she takes a chart of the price, but then she compares it to a chart of broad money. So, or M2 money supply, however you want to measure that. And so she didn't show me the chart, but we were talking about it. She said, if you look at a chart of M2 money supply and the gold price going back to the last time it really had a big peak, let's say, what was that, 2011 or so? She said that relative to M2, gold price was extremely overvalued using that metric. But today, even though nominally we're at a similar price, when you look at the expansion of the money supply, gold is super cheap. And I didn't ask her specifically when you're looking at just that ratio, what year we could compare it to. Would that mean gold being cheap like 2001, 2002, or does that mean gold being cheap like 2000, maybe 7 or 8? I'm not sure, but I think that's after thinking that through, I think that's a great way to value precious metals if you're looking at them from a speculative standpoint.
It is, and money is very interesting. We're famous for doing relative value assessments. I mean, our big call of 2019 second half was to be long gold, short oil, and that came from a measuring gold in oil barrels and looking at the technical analysis and the macro charting that brought about, and that was very fortunate. It turned out, almost epochally. We actually got infinite ratio. There's a spike on that chart if you have the gold, because of course oil traded zero, and when you divide by zero, you get nonsense. So that chart's almost spoiled for me now because it's got this moon spike, but it was a very profitable theme. And there's other commodities also for relative sakes. Copper, gold, silver ratio is one of my favorites because of the higher beta and where they are for bull market. So we do that valuation. So it's Lynn and I like the way she thinks, and relative value assessments across all aspects, even in agris and other things, should and can be done. George, this has been amazing. I've really enjoyed it. Give us your final, what would be, if I were to say, your parting shot, what should Joe Schmo, who's listening to this right now, what action should he be taking generally? What are his biggest things that he should be worried about? And how should he be preparing? If you were to give us a quick surmise, the George three bullet save your ass in reset economics times, what would it be?
For Americans?
Americans and international. You can split it if you want.
Yeah, for Americans, buy commodities and buy an RV. That's what I'd say. Because commodities are cheap right now, and an RV, because I think we're going to get a lot more social unrest. And if you just have an RV parked in your driveway that's stocked up with food, and if we get some riots or whatever that go through your area, you can just grab your kids and your wife, hit the RV, go up to the mountains and just chill out for a week or two and let things calm down. So, I mean, I kind of say that jokingly, but kind of not. Yeah. That's what a lot of my friends here in Phoenix have done. I went to college in Phoenix. So a lot of my friends here have done that very thing, where they've now got an RV and they go up to Pine Top or wherever if they think things are getting a little unruly here, regardless of what happens with the election. So that's what I do as an American. As someone outside of the United States,
on commodities, sorry, George, on commodities, were you being specific to anything? Were you referring to precious metals, bullion, or were you being more broad? Were you saying
broad? I mean, broad. Copper, the precious metals. I think agriculture is interesting. I think oil, I like oil. Uranium, there's pretty much, you can go down the list and it's all super cheap. Going back to your relative thing, if you look at commodities relative to financial assets, they're at an all-time low going back to 1900. So that's when I like to buy. And there's several arguments, of course, as to why they're going to stay low for the long term. But there's always a good argument for something staying low. I like to buy it when it's that low, then just hang on to it for the next 10 years and see how it works out. And usually it works out in your favor if you're buying things when they're that depressed and that unloved. So that's where I'd start for people outside the US. Definitely, you got to own gold, though. Especially for a foreigner, if your expenses are denominated in a foreign currency, and if you got the income in that currency, you're likely to see some huge inflation. If you live in a place that's got this dollar-denominated debt, if you're in one of these emerging markets, and if you don't own gold, I don't know what's going to protect your purchasing power at all. And then if you live in a place that maybe going down the path of socialism or Bolshevism or whatever you're referring to, I think you've got to look at Bitcoin there not only as a speculation, but also as a safety play. I mean, look at what happened in Venezuela with, and I know this firsthand because a lot of the people that work for me in Medellin were fled Venezuela, and if you would have had Bitcoin there, that could have potentially been your ticket out, just like gold has been over thousands and thousands of years. So if you're not looking at the world that way in those asset classes, I think you're doing yourself a disservice.
I'll give you a South African version on that. When Bitcoin was still $2,000, which is quite a bit, this was 2017 early, it spiked to 12,500 USD in Zimbabwe during various problems. People just couldn't get it. So local Bitcoin, you think people were paying over the odds because they were doing foreign exchange reserves. And these are all microcosms of stress situations. And if we're seeing this stress being visited on our country with, as we've mentioned, the Bolshevism, the social unrest, there's definitely going to be the demand. That's great advice. George, how do people get in touch? Apart from supporting your very popular and awesome whiteboard demonstrations and teachings on your YouTube channel, is there anything else you would like people who may wish to engage with you further that you'd care to mention?
They can go to whatever platform they're most comfortable using and just type in my name, and that's what all my accounts are under. So the main areas that I'm active is on YouTube and Twitter. So if you just go there and type in George Gammon, last name Gammon, I'm going to pull right up. Or if you just Google my name, you'll see all my content, my website, everything there is to know about George Gammon will pop right up.
You are who Google says you are in the end of the day. That should worry you as well. Excellent. It's been great fun, George. I'd love to have offline chat with you again sometime and maybe do this again. Thanks so much for popping on. We've really enjoyed that. And I'll let you know when it goes out. And thanks. We'll see you next time soon. And let's see what transpires in the interim.
Fantastic. Thanks for having me on.